Hi, Kim Darwaza here with your Northern Virginia real estate market update. Not a whole lot has changed. Mortgage rates have climbed some up to, I've seen up to 2.97%, but still historically low. And they think that they will stay in the low threes through the end of the year. Also, FHFA has extended the forbearance to another 18 months. So that is great. So with the mortgage rates going up, it's only the highest level since November. People are like, I had a client say, oh my gosh, it's like the highest level in like a year. No, it's the highest level since November, but will still remain in the low threes until the end of 2021. So I know there's a lot of misinformation out there. I see a lot of headlines, which is what the media generally does, where they try to terrify people because that's what sells news story. So I'm here, the media is trying to terrify. I'm going to try to clarify. And I have a degree in finance, like I've said before, and I'm a big numbers geek. So I have all the charts, facts, and figures to share with you. So the mortgage balance, which is the largest component of household debt, right? Because your mortgage is probably the biggest debt that you have or your rent, surpassed 10 trillion in Q4, increasing by 182 billion. And so people are like, oh my gosh, it's the highest mortgage debt we've ever had, and blah, 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 and I see all these agents out here, they do these things on TikTok and they'll talk about like how we're going to have a foreclosure case. And then I look up at their sales record and I'm like, they have no idea what they're talking about, A. And B, they don't have the sales record to back up any of their information. It's just like they're trying to be out there spewing bad information as if they know what they're talking about, but they don't. So it's better to listen to a person like me. So anyways, so with that being said, and it being $10 trillion, that's not really a big deal, because let me show you this chart. The household debt service ratio as a percentage of disposable income, and what that means is your disposable income is the amount of money you have basically to live after you pay taxes. So we'll go back to 1980. Housing was 4.38% of people's disposable income. Today, it's 3.85%. At the housing bubble, it was 7.21, which was the highest. And in the 90s, it fluctuated from like 6.2 to 5.46. So this is what we're looking at. So people's disposable income is a lot higher today, yet the rate of their mortgages they're taking on is lower. I mean, I know majority of my clients are approved for well more than they get as far as a mortgage is concerned. Most people are very conservative about that. So again, I'm here to clarify that, since, it's the headlines can be doom and gloom sometimes. So, again, 7.21% housing bubble, today 3.85%. People back then, I used to joke that if you could fog a mirror, you could get a mortgage, or if you had a pulse. It's not the case anymore. The lenders are much more selective. There's a whole lot more paperwork. You can't get no doc loans anymore. There's no 0% down unless you're a VA. So those, I think 3% for a normal person is the lowest I've seen, but most of the time it's 3.5 for FHA, and then 5% if you want to go conventional. And you don't have to, that's another big misconception, is that you have to put 20% down, but you don't. So if you take, so how we got that percentage is if you take the total quarterly required mortgage payments that everyone has, and you divide it by the disposable income that people have. That's how we come up with that rate. And consumers are not as leveraged as they were back in the bubble, like back in, which I lived through that whole thing. We have more equity in property today than we've ever had. 56.7% of people have at least 50% of equity in their home. I mean, I just know myself, I have 3 times what I paid for my house in equity pretty much at this point. I mean, I have more equity in my home than some first-time home buyers have, the price of their house they're buying. And I think a lot of people in my age group are probably in that situation if they owned their homes for a while. And another thing that caused the housing bubble and the foreclosure the last time is people were using their houses as ATMs. They were getting cash out refis, buying cars, so paying off debts, going on vacations. They were doing the thing where you would go to a new construction home, put down a deposit, and hope that when the house was actually built, 5, 6, 7 months, that it had gone up by 100,000, and then they would immediately turn around and sell it. And a lot of people got stuck doing that, and then they became underwater. So none of that is really going on right now. So the cash out refis right now are 1/3 of what they were when the market crashed. So like I said, 56.7% have at least 50% of equity, and it's because people aren't doing the cash out refis and the stupid crap that they were doing in 2007. So this is just like a little chart. You can see like how the cash out refis were, like the person, like how during the market crash, how much higher it was. So that's that. And then another thing is the number of consumers in foreclosure. So if we go back to 1999, you can see here on this chart, we still had a number of foreclosures back in 99, back when you didn't think, and then look at the surge. And then here we are down here, very few. And honestly, if they were saying if 300,000 houses got foreclosed on and they came into the market, we have enough pent up to demand to gobble that up right away. So I'm not saying it's a good thing, but I'm just saying it's not going to be the problem that everyone likes to freak out and say. So the mortgage rates will move up as the economy gets better. That's how it works. As people go back to work after that, it's not as affected in our area. So I think when I say these things, but you go to other parts of the country and their job statistics were affected by the pandemic. So as that gets better, as the economy gets better, the interest rates will go up, which needs to happen so that we can get more to a fair and even playing field market. So this is just, and still people's like, oh my gosh, the rates went up, blah, 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 blah. And I'm like, okay, when I bought my house in 1999, the rates were at 7%. And I lived to tell about it. I mean, I didn't have to deal with the 80s where it was like double digits, but this is just to show you like, how they were in the 70s, they were in the 8s, double digits in the 80s, and they went back to 8 in the 90s and early. So I was like 1999, that's why I was about a 7. And then we went on to 4 in 2010, and everyone thought, oh my gosh, 4%. Because when I first got in the business, we calculated everything on 5%. And then it's just gotten lower. So 2.81% was like Friday when we did the slides. So, so I think we're in a strong market. And 2, I will say the condo market has slowed a little bit, but I did have and 1-bedroom condos are much more difficult generally to sell than 2 bedrooms, but I did have one right at the Vienna Metro, and we did get multiple offers on that. We didn't have like crazy bidding wars or anything, but I did get 2 offers over the weekend. So that was encouraging. And it seems like all the offers I write for my buyers, they're not the only one, or they'll take a pass on a property because it's like I showed condo in Arlington that was right on Arlington Boulevard, and the road noise I thought was horrendous. We didn't make an offer on that property, but it was under contract. And same with another one in Reston. The layout was great, but the floors dipped in different places. Like they redid the flooring, they dipped, somebody still bought it. So I don't know if they thought, well, we can fix it or whatever. They're just willing to take anything at this point. But so things are still moving. I heard about a house in Burke Center, $100,000 over list, which I thought was crazy town. It was definitely one of the larger models, and probably, or the largest model that they offer in Burke Center. And it was very well done as far as updating. So, and yeah, and you hear about that like in neighborhoods like Burke, people want to live in, that it's like they might get 20 offers on the property. I usually don't let it go that it's just too much to go. And after a while, they're all the same anyway. So there's no point in doing that. And so, and I haven't had appraisal problems either, even though I've been sort of listing up a little bit from the previous sale. A year ago, I was having appraisal problems doing that, and I had a couple low appraisals, but this year so far, we've been smooth sailing in that department. And I had one that was really pushing it. I thought it was pushing the market, but appraisal was fine. So anyways, I think that's all I have. So if you would like to call, text, or email me with questions, or PM me, or if there's a question you have that you would like for me to answer, I try to answer questions that I get throughout the week. I am happy to do it. You're not bothering me, and I really actually enjoy doing the research. So thanks for watching, and I hope you enjoyed the weather today. I got out for a run, and it was awesome to finally be able to go outside, and I'm seeing that next week we might get a few days of 60s, so I'm really excited. So everyone, I hope you're doing well and staying healthy, and I look forward to seeing you soon.